Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 7th, 2025, and we're diving into Verisign's fourth quarter and full year 2024 earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Verisign, a leader in internet infrastructure and domain name registry services, has just released their latest financial results. I'm excited to break down the numbers and discuss what they mean for investors.
Revenue and profitability overview. Let's start with the top line. Verisign reported a revenue of $395 million for the fourth quarter of 2024, which is a 3.9% increase from the same quarter last year. John, can you elaborate on this growth?
Absolutely. The revenue growth is a positive sign, reflecting Verisign's strong market position in domain name services. However, it's important to note that the net income for Q4 2024 was $191 million, down from $265 million in Q4 2023. This decrease is primarily due to the absence of certain income tax benefits that were recognized in the previous year.
And how does this affect their earnings per share?
The diluted EPS for Q4 2024 came in at $2 compared to $2.60 in the same quarter last year. Again, this decline is linked to the tax benefits that boosted last year's figures.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Verisign reported an operating income of $264 million for the fourth quarter. How does this compare to their cash flow and share repurchase activities?
Verisign's operating income shows a steady increase, up from $256 million in Q4 2023. Their cash flow from operations was robust at $232 million for the quarter. Additionally, they repurchased 1.4 million shares for $260 million, indicating a strong commitment to returning value to shareholders.
What about their deferred revenues?
Deferred revenues totaled $1.3 billion as of December 31, 2024, which is an increase of $58 million from the previous year. This suggests a healthy pipeline of future revenue, reflecting ongoing demand for their services.
Strategic initiatives and market position. John, let's talk about Verisign's strategic initiatives. How are they maintaining their market position?
Verisign ended Q4 2024 with 169 million .com and .net domain name registrations, despite a slight decrease from the previous year. They processed 9.5 million new registrations in the quarter, up from 9 million in Q4 2023. The renewal rate for Q3 2024 was 72.2%, slightly down from 73.5% in the prior year.
And what about their registry agreements?
Verisign successfully renewed their .com registry agreement with ICANN, extending their role as the sole registry operator through November 2030. This renewal solidifies their long-term market position and ensures continued revenue from their core services.
Financial health and risk management. Let's shift focus to Verisign's financial health. How are they managing their assets and liabilities?
Verisign ended 2024 with $600 million in cash, cash equivalents, and marketable securities. However, their total liabilities stand at $3.36 billion, with a stockholders' deficit of $1.96 billion. This indicates a need for careful financial management to balance their obligations and shareholder interests.
What risks should investors be aware of?
Investors should consider potential risks such as security breaches, regulatory changes, and competitive pressures. Verisign's ability to navigate these challenges will be crucial for maintaining their financial stability and market leadership.
Key takeaways. As we wrap up, John, can you provide a brief summary of Verisign's performance and investment prospects?
Verisign delivered solid revenue growth and maintained strong operational efficiencies in 2024. With a net income of $786 million and a diluted EPS of $8, they continue to demonstrate financial resilience. Their strategic initiatives, including the renewal of key agreements, position them well for future growth. However, investors should remain mindful of the risks and financial obligations.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Verisign's performance in the comments below.